Hello, I'm Lilda Smith for the Finance News Network, and joining me from the Antares Dividend Builder Fund is Portfolio Manager Glenn Hart. Glenn, welcome to FNN.
It's a pleasure to be here.
So what is the company's benchmark and what process do you employ to determine which companies provide solid, sustainable yields and dividend growth?
Yeah, the benchmark for the product is the ASX 200 Industrials. It doesn't mean we can't invest in resource companies, but it goes to the profile of what company we're looking for. We want companies to have really stable revenue streams, to be able just to keep grinding out dividends year after year and improving them. We want companies to have strong balance sheet, good cash flow, strong market position. So there are a number of things that we look at to diversify the risk and just to make sure that the high yield company we get is not a yield trap, that it will generally be able to grow the yield as well over the long term, because we understand that although it is primarily a yield product, that people expect and want capital growth out of equities as well over the long term.
So with a focus on dividends, how much are you expecting in terms of capital growth?
We think with the market where it is, it's about a little bit higher than long-term average. So capital growth over the long term, total return for Australian equities has been 9 or 10%. And of that, the majority comes from dividends. So we're expecting dividends to be 5.5%. So you can expect, capital growth from a market of maybe 4 or 5% on top of that. And hopefully through outperformance, you might get a little bit more on top of that.
So Glenn, which sectors have you favoured over the past year and which are looking most prospective to you now?
As a yield product, generally you find most of the areas that give you the highest yield tend to be infrastructure, utilities, financials, telcos, those sorts of areas. So they're still the areas coming up as the highest prospective yield. So within those sectors, we try and focus on quality and growth and discount to valuation to maximise the opportunities.
Finally, Glenn, what environment is the most favourable for solid yields and dividend growth, and what factors will you be paying the most attention to over the coming quarter?
Yeah, the best environment to be investing for yield in equities is when interest rates are low elsewhere. So when bond rates and cash rates are low, that's really when people tend to favour a high yield from equities, and that's when they're going to perform the best. And likewise, if you have very high interest rates from cash or bond rates, well then it's going to be harder, to be more attractive for equities. So at the moment, the global low yield environment remains an attractive one for this type of strategy. So going forward, we're still, although our overall strategy is to present a high yield, we're still looking at individual stocks, and each individual stock has to stack up.
Glenn Hart, thank you for the update from Antares Dividend Builder Fund.
Thank you.